Welcome. This is your Option Monster Volatility Sonar Report. From the floor of the CBOE, this is Jamie Tyrrell of Group 1 Trading. Well, the market started off down today, but has rallied back to unchanged, and we've actually had quite a bit of VIX trading today. We've talked a lot about realized volatility over the past month and a half, how it's extremely low. It's running about 8, and yet when you look at the VIX and you look where people are pricing volatility to be, they're pricing it much higher. They're pricing in that the market's going to whip around a lot more, that there's going to be big sell-offs a lot more. With the VIX at 17, they're pricing in once out of every 3 days, the market's going to be moving 1%, which is more than double what realized volatility has been over the last month. If you look into the further out futures, June, July, August, those are pricing in VIX futures levels of about 22 and 23. So pricing in even higher volatility. What that's telling you is that most VIX futures players don't see this run we're on right now in the S&P 500 continuing. They see us returning to a much more volatile environment, though not the sort of environment we were seeing last year. Still a significantly more volatile environment, almost triple as much we're seeing right now. One big VIX option player took the opposite view today. They say volatility is coming in at 8. They don't see it getting much more volatile. So what they did was they sold 10,000 of the June, July, and August 1720 call spreads. Each spread they sold for $190. Each spread has a maximum value of $3. So if we do return to the sort of volatility levels we've been seeing, they're going to lose on the spreads. If we do go back above 20, those spreads will settle worth $3 if we settle each month above 20. If we come down below 17, those spreads will all be worthless. So their bet is that we're going to move down, that this realized vol of 8 is going to move the VIX settlements down to below 17 levels, below where the VIX cash is right now. If they win on it, they win $1.90. If they lose $1.10. So that's the bet they're making, is that the out-month VIX futures pricing in 22, 23, pricing in a lot more gloom than we've been seeing over the last couple months, are just too high. The pit took the other side of the trade. They like to buy there. That's the big trade we've had today. Another big trade is the April-May 20 put spread, traded 52.5 cents 34,000 times. So a big return in volume. There's a lot of disagreement with the pricing right now. With the VIX futures so high over realized volatility, there's a lot of people who are now coming to say, well, perhaps this is too high, and there's others who still believe, yes, this is justified how high they are. This run the S&P has been on can't maintain its momentum through first quarter earnings. We'll see who's right over the next few weeks. Jamie Tyrrell with Group 1 Option Monster.